Hey guys, Daniel Rowe here of TradeThePlan.com. Just wanted to make a quick video on a new tool we've developed for NinjaTrader 8. So NinjaTrader 8 allows us to develop some really cool stuff with what they refer to now as add-ons. And these add-ons let us do quite a bit more, access quite a bit more than just a standard indicator or strategy would. This began as something I wanted simply for our own internal use, but we've beefed it up a bit and have now made it available to all of you, and we're calling it the Timeframe Tuner. So we use this to fine-tune all of the periods of our tick charts and volume charts if you use them, so that we can calibrate them according to target minute periods. So if I wanted to use, say, a tick chart that would emulate a 5-minute chart during the day session, have a similar number of bars as a 5-minute chart would during the day, I just set this target minute period to 5 and then determine the number of sessions I want to include in the calculation. Here I've set the RTH session, that's the regular trading hours, the day session for the 6E, and then simply click this calculate button, and there is the average ticks per bar, 755, that would approximate a 5-minute chart during the day session. And it gives you some other data here, total volume, average volume per session, and then this would be the target volume for a volume chart that would emulate a 5-minute. Total ticks, average ticks per session, and then average volume per tick. So that's the average number of contracts per trade, per transaction. So 1.7 for something like the ES, it's usually above 2.5. This is the maximum range of those past 10 sessions, 185 ticks. This is the minimum range, 52, and this is the average range of those past 10 sessions. So I'm sure we'll add more in the future. There are a number of different things I'm thinking of, but one feature I'm thinking would be nice would be having like a link, chart link up here, where you could click the calculate button and it would automatically adjust the chart, and then maybe have like a multiple that would you would be able to link to another chart. Say if you wanted 3 times this number for another chart, or 6 times this number for another chart, you would be able to do that just automatically. So that's just a couple of things I've been thinking about adding to this in the future. But we were essentially having to do this by hand before, and when you're trading multiple markets using multiple time frames, it can become a pretty tedious process. So granted, this is not some indicator that's going to help you pinpoint entries and exits, but it's a tool that we're using to save us time, essentially automating a process that we were doing manually. And I'm sure you're like me, you want to save as much time as you can so that you can dedicate as much time as possible to doing good analysis and looking for that next great entry, as well as, of course, have more time with your friends and family. Now, if I want to do, say, the ES, I just set ES there. Of course, you can, do whatever instrument you want, but I want to match it up with the RTH session. So that's the actual, 8:30 a.m. to 3:15 Central day session. So for the CME US Index Futures RTH, and then click calculate. If you want to, make it really precise for the exact time period that you trade, say you only trade 3 hours, 4 hours in the morning, you could create a custom session template and just use those particular hours that you want to trade, and then get an even more exact number if that's what you're after. But here we have the ES, so that's 5,055 ticks to match up with a 5-minute chart. Oh wow, yeah, it's almost at 3 contracts per tick. So a lot of volume coming into the ES recently, and a large number of contracts per tick. So looking like some deeper pockets are starting to step in. Max session range 188, pretty large for the ES, and there's your average range. And this, of course, is your target volume. So right at 15,000 to match up with a 5-minute chart. Doing this the way that I was before, manually, sort of haphazardly, really. Basically, I just didn't want to sit through, having to add up all the ticks and do the calculations and then update the charts and do that for so many markets. It just became one of those menial, mind-numbing tasks. This just makes it so much easier. All right, now that I've introduced you to the tool, let me go into an example of why it's so important that we use both time-based and non-time-based charts or tick charts in our trading. And I'll do that by explaining how and why I entered and managed a recent trade that I had. And the trade I want to go over is a short trade I initiated right here in the 6E late Thursday night. Okay, so I sold here expecting to make money, as it goes down. And I'll first go over the reasons for the entry and then go into the details of how I managed the trade and then actually exited that short, closed the short trade during the live trading room Friday morning for a very particular set of reasons. But the main reason was because it was finding support on an area that was visible only on the tick chart. Okay, so I know many of you, especially any of you that have been following me for any length of time, will know I use market geometry and a little bit of volume profile to define the areas where we expect supply or demand to enter the market, then placing trades as close to those areas as possible once certain other volume and momentum conditions are met. Okay, so this is a 15-minute chart of the ES, the Euro currency futures, essentially the future of the Euro USD cross. Okay, so just to explain to you what's on the chart here, this is our Toolbar Pro, which we should have an alpha version for Ninja 8, hopefully in the next 2, maybe 3 weeks. I do have a little pre-alpha that's, starting to work. It's saving objects, and we have a lot of the internals done, so we've definitely made a lot of progress there. But anyway, the toolbar, which we use to implement the market geometry and the volume profiles, just to show you, this is the other main area that I had coming together here. Didn't quite make it to that area, but I'll show you some other reasons for expecting supply to enter the market there. Okay, and then the volume profile tool, which all of these have hotkeys, so I can just use the hotkey. And there is a range profile, and you can see the majority of the volume was in this area. This is the volume cluster. So we were also inside of that, almost to the point of control. Not quite, but almost. Okay, so these were the major areas for the trade, and I would say that because of this setup and the number of bars, I think there was like 80 bars, something like 81 bars on this 15-minute chart, 86. I would say that the 15-minute chart in this case is the operative time frame for this trade. Okay, so what does that mean? That means that I want to confirm the entry and then manage the trade using a couple of charts that are faster than this 15-minute chart, namely the 5-minute and a tick chart, and then one of our custom bar types, which uses both time and ticks. So it's kind of a blend of time-based and non-time-based. So we have minute charts, which are time-based, and then tick charts, which are obviously non-time-based, and then we have a blend that incorporates both tick and minute data to form the chart. So again, the operative time frame here would be the 15-minute, and I want to confirm the trade and then manage the trade using the faster charts. And to confirm the trade, I want to wait for volume divergence and momentum divergence at the areas on those faster charts, and I want to have one of the areas on those faster charts actually sloping against the trade. So here I have one area sloping against and then one area sloping in favor of the trade. And obviously the trend, the larger trend, is down, and we've just recently had a big down move. And I was essentially shorting this as, a retracement swing high, obviously hoping to break to new lows, which didn't happen. Okay, but I managed to close it with as much profit as I had on the trade, from the time that I woke up. Actually would have served me well to set an alert and wake up at what I think it was 3 o'clock in the morning here and close it right there, but I'll get into that in a moment. But yeah, after the time that I woke up and came to the computer, of course I had my stops in place. I managed to exit this trade with a profit because of that tick chart, okay, rather than taking a loss on the trade, which, it actually turned back up pretty quickly immediately following my exit. All right, so that's the 15-minute chart. Just to show you briefly one other area, this is a 90-minute chart using non-back adjusted data. And you can see there's that down sloping upper median line here. So I definitely had plenty of reasons for the trade. Multiple areas coming together there for a swing high. And I had set an alert there using our little alert system here that we have built in so that we can attach alerts to these areas. And it kind of surprised me because the area was so far away, and I was expecting, maybe in the morning to be up there for the short, and a huge amount of volume came in and just took it straight up into the high. So I waited for the volume divergence. We actually had volume divergence here on the 15-minute chart, as you can see here, which shows up on the 5-minute as well. Okay, so this is relative volume. Of course, the volume data on a 15-minute chart is, the raw volume data is not very useful, but the relative volume is incredibly useful. So again, I want to wait for volume divergence on the subsequently faster charts. Here you see a 450 tick, and our RTS chart, which is now called the row bars. And the tick chart on the left, just to show you here, is set to a 3-minute period for the target time period. See me, FX Futures, RTH, and I set it to a 3-minute. And there you can see 451. So I just round it to 450. Okay, so this emulates about a 3-minute chart during the day session. So we had a huge amount of volume come in, so much so that it basically began plotting like, it would during the normal morning session, taking it straight up here, and then a sign of weakness, another sign of weakness, and momentum begins going sideways to down, giving us actually triple divergence there, which is why it's that magenta color. That's the divergence is pro indicator. And then these are two instances of our volume analyst. This is the raw volume plot, so it's showing volume per tick on a tick chart. This is volume per second. Same thing over here. Momentum in the divergence is pro, volume, raw volume, and then volume per second. Okay, so we actually have volume divergence here on this RTS chart, which is 2 times faster than this 450 tick. And then I also have a 5-minute chart, which you see here on the right. And there you can see the big volume divergence there. This is relative volume, again, momentum, and then a 2-minute chart. So this would be the fastest chart that I would use to confirm, say, trades that occur from the 5-minute chart. And at this high that I shorted, you can actually see the huge volume signal that we had here on the 2-minute in the raw volume, that big 2-bar pattern there. That's a big high-density climax. So a very large, wide-ranging bar with a huge amount of volume and very high volume per range, followed by a narrow range with even higher volume per range. So a clear sign of supply stepping into the market right there at all of those areas on volume divergence on the 5-minute, and also volume divergence on that RTS 2 chart here with very high volume per second and momentum divergence. So those are all of the conditions for confirming that supply was coming into the market there at those areas where I initiated the trade, and then the area sloping against the trade on the faster charts was actually on the tick chart. So let me just show you how I would do this. So this is the major low. That's the first major higher low there. So if I draw that same market geometry there on the tick chart, low to major higher low, and just to show you that is the same exact area. This is a chart sync tool that we use, especially for bar by bar work, kind of like I'm doing here now. So that's the same low. So the same exact area, same exact market geometry, but you see they're different, right? On the tick chart, we break through the top of the channel and then make it up to the upper median line there, which coincided with all those areas on the 15-minute and that 90-minute chart. But on the 5-minute, we actually go through the center median line here, but not up to the upper median line, and then stop at the warning line of the channel, the 50% warning line of the channel. So that is an area, but the median line is a stronger area. So this was actually the area that I used to confirm the trade from the faster charts, the one sloping against, like I said, as I was getting started here on these charts. So I have the big, large areas on the 15-minute and the 90-minute sloping in favor of the trade, sloping down for a short. And then this is the major area on the faster chart sloping against the trade. Okay, so great. I take the short there, put in my stop above the areas, and then go to sleep. And this is really where most of my really big trades will come from, where I'm actually initiating the trade at the end of the day and then waking up to find that I'm, either stopped out or up really big. So in this case, rather than being up really big, as I was in the middle of the night right here, when it moved in my favor 100 ticks on 6 contracts, it had actually pulled all the way back into those same areas on the 15-minute that it turned down from before and was right in here. Okay, this is where we open up the trading room at 7. So right after that, it did pull up and make a new high here, and it stopped on a big churn bar, meaning supply coming in, and volume divergence on the tick chart, and then started moving down. Okay, since I've given you so much detail to this point, I may as well give you a little bit more. At this low, where I was up right at 100 ticks, I think it was like 97 or something, if I would have been at my computer, that would have been an exit. And let me show you why. So this is the low before the high, and then the final low. And look at that. We broke through this channel and then pulled right back to it, right in line with that center median line there. Okay, and we did that on an extreme density selling climax. So obvious demand coming in here, right there. And then of course you see what happened. It took off straight up, but thankfully didn't stop me out. So I entered about right there, and I had my stop up here. Unfortunately, I wasn't using my automated trade management strategy. Otherwise it would have automatically taken half of the position off here. See, I've got all of this programmed into Bloodhound and Blackbird using our reader system for the market geometry and volume and divergence from the different time frames. On this chart you see Bloodhound. This is what lets us program out all of these different rules from the different time frames and market geometry, volume profile, really anything that you can think of, everything that we have, giving us these signals here when all the rules are coming together. And you see that's right there. That's where I would have taken half off if I would have had this trade manager running at the time. So this is Blackbird, and this is what we use for creating the rule sets to manage the trades. So quite literally anything that you can think of, you can program in this. Wouldn't really call it programming per se, it's like rule sets, conditions for trailing the targets, the stops, attaching the orders to the market geometry, getting the signals from Bloodhound from the other charts, using our reader system. So it's the readers that we have that enables us to do all of this stuff, from the other charts inside of Bloodhound and Blackbird, which is really pretty amazing. But anyway, let me get back to what I was doing here. Okay, so at this point, it's coming down, and I'm happy. I'm thinking it's okay, this is going to be the big wave down. So now I'll add back the original areas that I had, and you see we've broken through that lower median line, right? On the 5-minute at this point. Okay, so this is what? 825, and then it comes down again right there. Okay, where are we at on the tick chart? So I've drawn the same exact area, channel with median lines and morning lines on the 5-minute as I have on the tick chart. But on the tick chart, we've moved from upper median line to lower median line. And that's something we see quite often. And then what do we have at that low? We have an extreme churn bar, meaning that we have, actually there are two churn bars in a row, followed by an extreme churn bar. So that's a huge amount of obvious demand coming in off of that lower median line after having previously turned down from its opposite, from the upper median line there. But on the 5-minute, we had already broken through that lower median line. So this is a great example of why we have to use, or should use, if you're not, both tick charts and minute charts with market geometry. And even if you're not using market geometry, if you're using volume in your analysis and momentum, then you want both tick and minute as well, because the tick charts will display the volume as volume per tick, total number of transactions per tick, as opposed to total volume per time period. So it's two different views into the volume, and the bars build differently. They're slightly more uniform on a tick chart than they are on a minute chart. So the momentum signatures are different on a tick chart than they would be on a minute chart. So you get a much better perspective, much better look into what's really happening in the given market that you're analyzing, trading. Okay, so sometimes the exact opposite will be the case, where the area will line up perfectly on the minute chart and not on the tick chart. And this is more pronounced over shorter time spans of, say, 3 days or less, where the differences in, especially in volume data in the overnight, makes it to where there are typically a lot fewer bars during the overnight session on the tick chart. So you get these oftentimes completely different areas in the market geometry on the tick charts as you would on a minute chart. And then for the confirming data from the tick charts, from the volume and the momentum, we want to make sure that we get those tick values, the tick period, to line up with the right sized minute period. So if I'm using this tick chart to confirm the trades from a 15-minute or a 5-minute, I want it to be the equivalent of a 5-minute chart or less, say between a 5-minute and a 2-minute. And having this little time frame calculator makes setting those periods so much easier and less time consuming. Okay, that's it for now. Thanks for watching. Safe trading.